is about to lose its most important industry, and it's already happening. Right now, Chinese electric cars are taking over global markets, not slowly, not quietly, but at a speed most people didn't expect, and the companies that built Europe's economy are starting to feel the pressure. Factories, jobs, entire supply chains, all connected to one industry: cars. Because for Europe, cars are not just products, they are power, exports, identity. And now, that power is being challenged, not by war, not by crisis, but by something much more dangerous: competition at scale. And once that kind of shift begins, it doesn't reverse easily. To understand what's happening, you need to understand how big this industry really is. In countries like Germany, cars are one of the largest contributors to the entire economy. Millions of people depend on it, not just factory workers, but suppliers, engineers, logistics networks, entire cities built around production. And it's not just Germany. Across Europe, the automotive industry has been a core pillar for decades. Exports to the world, premium brands, global dominance. For a long time, no one could compete at that level until electric vehicles changed the rules completely. Because EVs are not just new cars. They are a completely different system: fewer moving parts, different supply chains, different cost structures, and most importantly, different advantages. Traditional car companies spent decades perfecting engines, precision engineering, performance, but EVs shift the focus toward batteries, software, and scale. And this is where China had a head start. China didn't just enter the EV market. It built an entire ecosystem around it: government support, massive investment, supply chain control, and aggressive scaling. Companies like BYD didn't grow slowly. They expanded rapidly, producing vehicles at a scale that allowed them to reduce costs dramatically. And when you combine scale with cost efficiency, you get something powerful: undercutting, a product that is cheaper but still competitive, and in some cases, even better for everyday consumers. Now think about what that means in reality. A customer in the UK walking into a dealership, comparing two cars, one from a European brand, one from a Chinese manufacturer. If the Chinese EV is significantly cheaper, with similar features, the decision becomes simple. And when that decision happens once, it's just a sale. But when it happens thousands of times, it becomes a trend. And when it becomes a trend, it becomes a shift. And this is already happening. Chinese EV exports into Europe have been rising quickly. The UK, Germany, France, the Netherlands, markets that were once dominated by local brands, are now seeing increasing competition, and not just at the high end, but across multiple price segments, from budget-friendly EVs to mid-range models, which expands their reach even further. This is where things get uncomfortable, because once cheaper alternatives enter the market, they don't just compete, they force prices down. European companies now face a dilemma: lower prices to compete, or maintain margins and risk losing market share. And neither option is easy, because lowering prices affects profits, and profits fund innovation. So, over time, pressure builds. And behind all of this is the battery, the single most important component of an EV. And China dominates this space, not just in manufacturing, but across the entire supply chain, from raw materials to processing to production, which means even when European companies build EVs, they often rely on parts of that system, and that creates a hidden dependency. Europe isn't ignoring this. Governments are reacting. Investigations into subsidies, discussions around tariffs, support for local manufacturers. But these are reactive measures. And the challenge with reacting is that you're already behind, because scale, once achieved, is difficult to match quickly. And this is where the story becomes human. Factories slowing down, production lines adjusting, workers uncertain about the future. Because behind every industry shift are real people, real jobs, real consequences. And when an industry as large as automotive shifts, the ripple effects spread far beyond it. China's strategy isn't short-term, it's long-term positioning. Expand globally, enter new markets, increase production capacity, and eventually build dominance in key industries, not just EVs, but everything connected to them. And this is why this story matters, because it's not just about cars, it's about control. Control over manufacturing, supply chains, and economic influence. Because industries like automotive don't exist in isolation. They connect to everything else. And once that balance begins to shift, it doesn't stay contained. It spreads to other industries, other sectors, other regions. And by the time it becomes obvious, it's already too late to reverse easily. So, no, this isn't just a trade story. It's an industrial shift happening in real time. And cars are just the beginning. Because once one major industry moves, others follow. And the question isn't whether this is happening, it already is. The real question is how far it goes. You were watching headline circus, while everyone else was watching the surface. Goodbye.